Welcome, welcome. Let's see if we are live now. Yes. Okay, perfect. We are live. Okay, hello everyone. My name is Rodrigo Antonio, and I'm a performance and psychology coach. And I've been working with traders for over a decade since I started trading in 2014. And since then, I've coached hundreds of traders overcome their psychological hurdles like fear, FOMO, and revenge trading. These are some of the most common. And I've been helping them achieve consistent results. And we've been able to secure millions in funding and over $2 million in payouts. So my passion is really about equipping traders with the mental frameworks and the emotional mastery needed to thrive in the markets. And today I want to talk to you guys about the neuroscience of impulsive behavior. So really, really excited about that. So we should be tuned into Think Capital's YouTube channel. Let's have a look to see what's going on. All right, just waiting for a few more people to arrive. Okay, fantastic. So those of you in the chat, let me know where you're connecting from. We'd love to see. Let's have a look. And I'll start sharing my screen. Okay, we'll just wait a couple more minutes for people to come in. So those of you tuned in live, why do you think that we experience these psychological issues in trading? What is it about? Is it because the trading strategies that we're trading, are they quite difficult? Is it the rules of the prop firms that we're trading with? What if you were trading with your personal trading account? Would that make you profitable? Would that make you be able to consistently profit over time? So you won't have to worry about these drawdown limits and rules? Or are the problems neurological? Are they the way our brains are made up? So that's the kind of things I want to discuss with you guys today. All right. Let's see. And what I'm going to be doing with you guys today is I'm going to go over some of the neuroscience, I guess the science behind impulsive behaviors. I'm going to give you guys some solutions. So it'll be really good to get you guys engaged. And I'll be answering some of your questions at the end of the webinar. Okay. So really, really looking forward to hearing your questions. We'll just wait one more minute. Those of you watching the recording, you can just go ahead and skip to the bit where I'm actually presenting. It's always with these live streams that there's always that sometimes there's a bit of a pause in the beginning. All right. Are we good to go, guys? Okay, I think we're ready to go. I think everyone's been very, very patient, so I appreciate it. Let's see. Excellent. All right, I'll go ahead and share my screen. Here we go. Excellent. Yeah, if you guys can type a one in the chat, if you can see my screen. Or you may not have a chat box. Let's see. Okay, no worries. I'll just assume you can see my screen. I've just checked it on YouTube. It looks good to go. All right. All right. So I want to discuss with you guys uh, the neuroscience of what's happening in our brain when we experience these impulsive behaviors. And I think this is really important to understand. As you can see here, I've prepared some points, and we're going to go through these points one by one. All right. So we'll start from the top. I want you guys to understand cognitive biases. And the reason why I want you guys to understand some of these most common cognitive biases is because these are essentially programs, in simple terms, programs that have been placed in our brains to to help us survive. Okay, to help us with dealing with uncertainty and risk and danger, and also to help us survive and thrive, to help us be able to navigate through life. And these cognitive biases, they serve us very well when we are in nature. Okay, when we are dealing with um, different types of habitats. Uh, but when it comes to trading, these cognitive biases tend to work against a trader. Yeah. And so I want to explore this a little bit deeper, so that if you guys can understand what these programs are doing to your trading, then we can come up with some solutions together. And these solutions will help you in building um, the awareness of what these cognitive biases are, and also find some solutions. So let's begin with loss aversion. Loss aversion is a very common cognitive bias, and essentially what it is, it's all about avoiding losses. Okay, um, it's a when you experience loss aversion, there's this fear of losing. Um, there's this fear of losing the profit that you may be running at during a trade. Okay, and this ends up traders end up holding on to positions for a bit too long because they don't want to lose sometimes. In some cases, uh, traders, they close the trade early because they're in a small amount of profit, and they just want to capture it very quickly before things turn around. Is that something that has happened to you guys before? Just let me know in the chat. I know this is very, very common. So what you want to do is you want to understand why you fear losing. And you want to reframe this because losing is part of trading. And you got to treat this as a business. Okay, so every loss is an expense to your business. That's how you got to think about it. That's how you got to reframe it. So next time you start fearing losing and you get that anxiety, just reframe it and remind yourself that this is a business expense. Okay. Now it's important to set very clear and predefine stop loss levels, take profit levels, as well as where you're going to be taking partials, at what point are you going to move your trade to break even. And these predefined entries and exits, they have to be aligned with a verified model, a verified and proven strategy. And you this process requires some back testing, some forward testing on demo, perhaps maybe on a small live account, perhaps maybe on a small evaluation account, something that's not going to break the bank, something that it's affordable. So if you're used to buying 100K accounts, 50K accounts, 200K accounts, then purchase a 10K or a 5K funded account just so you're collecting data. Now, here's a big mistake that many traders make when they're back testing. The biggest mistake is purely out of ignorance and I guess out of laziness at sometimes. And ignorance, I say that is because you haven't traders haven't really been taught how to backtest properly. Okay, or they haven't actually studied how to do it effectively. And what this leads to is very poor type of backtesting where you go back in time on TradingView and you're just marking up your charts and you're using the replay tool and you're taking screenshots and then you put it all these screenshots into a folder. Is that quite is that something that is quite common with you guys? Have you experienced that before? I'll just check the chat. No, no worries. Okay. So if that's something that you're currently experiencing, then you need to change that. You need to be able to learn how to backtest properly. Now, there's some great backtesting softwares out there. You've got FX Replay, you got Forex Tester, you have the new version of the TradeZella backtesting tool. You have all these amazing tools that I refer to them more as simulation software. So you're simulating your trading strategy. You're simulating, and this is a very good practice. You have to be able to simulate very often, at least once or twice a week. Even if you're a profitable trader, you should still be simulating. You should still be practicing. And I always compare simulating to that of a pilot who is training to be a pilot, and they have to clock up a certain amount of hours under simulated conditions. The trader also requires this too. And even when the pilot has achieved and attained their license, they've flown, they still every few months or every year they have to renew that license and they have to again go through examinations, they have to go through some simulated environments and training. And whenever there's an update in a new plane, they have to obviously practice in the simulation. So why can't traders do the same? Okay, every single time you change a prop firm, you should be simulating, you should be practicing, and you should be able to achieve the targets and a payout under simulated conditions before you even attempt the funded account. That's going to save you time, it's going to save you money, and it's going to allow you to understand what your predefined rules are. Now, if in most cases, having the right set of data and a trading plan that's verified by this data, that solves like 80% of psychology. Like literally, it solves most of these cognitive biases, just having that data alone. Okay. So be honest, guys. Have you done the right kind of back testing? Have you been able to verify your data? And do you have a trading plan that is reflective of this data? Be honest here. Because if you haven't, then get your act together. All right. Now, the next cognitive bias I want to discuss is overconfidence bias. Now, overconfidence bias, this usually occurs when traders they believe that in that time, in that moment, that they can predict anything. They're so locked in. And this is quite dangerous because it leads to poor decisions in risk. It leads to oversizing. It leads to over trading. It leads to revenge trading. It is it's so much. This causes so much damage when this overconfidence comes. And what happens when we're overconfident is that we're flooded with huge amounts of dopamine, and so we're feeling good. And because we're feeling good, we become almost complacent. It's like there's no worry in the world. I've got this. I know what's about to happen, and so I'm gonna double my risk here. I've just lost this trade. I'm gonna make it back. I've got this. I trust myself. I trust my strategy. When really you should have limits on how you what you should do after taking a loss. If you take a loss, you should have certain rules. And I'll give you some examples of some rules that my clients have used. If you take two losses in a day, the next trade, you halve the risk. Yeah. Or if you take two losses and you got the direction wrong, you're only allowed one more trade to capture the next direction, to flip your bias. That's another type of rule. But this is all based on data, by the way. Okay, so this might not work for your strategy in your system, but I'm just giving you some examples. I've got there's other rules such as, I take two losses in a row and I stop trading for the day. I'm done. So there's two bullets in the mag, and that's it. So you got to have these predefined rules in place to um, to not let this overconfidence take over. In other cases, I've got clients who, once they have, let's say, 2R for the day, they're not allowed to continue trading. Yeah, they have to walk away. So even when you win, you need to have limits in place, because overconfidence, like I said earlier, it really elevates your levels of dopamine. And when you have high levels of dopamine, it triggers euphoria. And euphoria is that really good feeling. And there's studies, psychological studies that have there's a correlation between high levels of dopamine and euphoria, and they've connected that to short-term memory loss. It's crazy, right? So imagine you're feeling great, you're feeling euphoric, and suddenly you've forgotten your rules. You've forgotten your trading plan. You've forgotten your risk management rules. You've forgotten the rules for the prop firm. And there's many rules. And so you got to be very careful when you're feeling too good. That's why you need to adopt a practice where you are going to take a break, have these planned and intentional breaks during the day. And those intentional breaks are for you to disconnect from the chart, disconnect from your P&L, disconnect from it all, and go for a walk. A 10-15 walk, that can do you so much wonders. It's good for your health, you're burning fat, plus you're allowing that dopamine to leave the body, to start sort of dispersing. And when you come back to the charts, you're a little bit more grounded. You're much more equipped. You're much more you're in a state of composure and calm once again, rather than euphoria. Okay, you got to think about your emotions like a pendulum. Yeah, so the pendulum, it oscillates between negative and positively charged energy. Yeah, if if it's too positive, or if it's too negative, what ends up happening is that it swings from one side to the next quite rapidly. So there's a lot of volatility in your emotions. So if you experience both extremes of emotions in one session, where one moment you're feeling quite negative and next minute you're feeling really positive, there's a problem in how you deal with your emotions. The volatility of your emotions is too high. You need to reduce the volatility of your emotions. So what you want is you want to oscillate between positive and negative. And when you oscillate between positive and negative, you're more likely to feel a little bit more neutral. You followed your rules, you win the trade, you feel a little bit good. You lose a couple of trades, that's okay. You don't feel so bad, right? And you're able to kind of oscillate between the two. This is how you got to adopt. You don't want to be too emotional, either positive or negative, because then what ends up happening is when you're feeling both extremes, you're going to make extreme decisions. You're going to make stupid decisions. You're going to break your rules. Yeah. Does that make sense to you guys? Just let me know in the chat. Now, it's important to understand when your overconfidence comes. And this is where having a trading journal helps. This is where you start tracking your journal, and you can accompany that journal with extensive notes about how you're feeling. Or you can accompany your journal with a link to a video. Okay, so you can, for example, live stream on YouTube, and have your channel unlisted. So it's just for you to store all of your journals, and then that could be a 20-minute, 30-minute. You're just journaling how you feel, how you think about the session, and then you copy that link and you add it into your journal. So then that way, in future, whenever you want to revisit that particular journal or that session, you've got a whole bunch of videos expressing how you felt, what you thought, why price did this, etc. Oh, and so you want to start collecting this, and you want to review these videos every now and again. Every weekend, you want to review your tapes. Monthly, you want to review your best days, and you want to review some of your worst days. So imagine being able to go back in time and replay what you were thinking and feeling. How valuable is that information? And that's why I always encourage my clients to record their sessions, and just create a catalog of all of their sessions in video format, because it's or in via text, because when you all of this data is your own data, and this is going to help you in understanding what triggers you, understanding your own impulsive behaviors, understanding your strengths, not just your weaknesses, your strengths, so that whenever you experience those environments, those situations where you are at your best, that's what you want to replicate. You want to continue to replicate your best environments in trading, your session times, the type of setup, the asset you're trading, the you know the routine. So your morning routine, whatever is the best morning routine for you to get you pumped and ready and primed for the session, that's you want to know exactly what that is, so you can rinse and repeat it, because that's where you get, if you have a consistent routine and a process, you'll have consistent results, right? Okay, so let's move on to confirmation bias. Oh man, this one is Confirmation bias is my nemesis. It's my enemy, number one enemy in my brain. And most traders experience this. Essentially, with confirmation bias, is traders tend to ignore the information that is against their own beliefs or what they want. So you traders, let's say for example, you want to win a particular trade because this one trade is going to get you to that payout, or this one trade is going to allow you to pass that particular phase of evaluation. And what ends up happening is, because your desire for it becomes so strong, you are blindsided, or this particular bias, it, even though the information in front of you is telling you actually this is not a good trade, um, this trade may not be ready. And so confirmation bias then triggers FOMO, right? Because you see a move and then you might have jump into the move too late, or you think you're about to miss the move, so you jump in too early. Uh, and I know this is a very common issue because most of my clients have experienced this, and it's because of confirmation bias. And so you have to understand what your beliefs are. What do you want in the market? What is your intention? Is your intention to make money? Is your intention to pass the account? Is that the intention? Or and is that intention serving you? If the intention of the session is the outcome, then you have already lost. Okay? You've already lost. Even if you win the trade, even if you get the payout from that session, you've lost, because now you've taught your brain that you if you make the intention to want to make money and to get the payout, and then you get rewarded for it, then your brain is going to want that all the time. So what happens when you lose? When you lose, you get very disappointed because, hey, the last 5 times you've made that intention and you managed to get away with it, when you end up losing, it feels like 3 times worse than it should actually feel. It's back to that sort of emotional volatility again, right? And so you got to understand like what beliefs you have, what intention you have when you start trading. And otherwise, confirmation bias, it leads to poor decision making, right? And it's important to understand the evidence that is required to make a trade valid for you, and also the evidence, which is your invalidation rules. Okay, write that down, guys. If you don't have invalidation rules, then how do you know whether the trade is good or not? You need to identify what makes a trade invalid, or it lowers the probability, because when that happens, you need to stay out, right? You got to stay out the trade. Um, and even if you stay out the trade, because this is another issue that comes up, is um, traders, they have these invalidation rules, and then they respect the rule. However, then the trade ends up you know, hitting TP, but then they get disappointed at the fact that, oh, it's because of this invalidation rule I ended up missing this trade. Well, this is something that you need to condition and train, that you need to accept that you made the right decision. You need to accept that based on that invalidation rule, it lowered the probability, but it didn't make it impossible. It will when you know when it comes to probability, when it comes to trading, there is no certainty. So you got to constantly challenge the thoughts of certainty. Like, I am 100% certain that price is going to go here, and before price goes there, I'm going to see this. I'm certain of it. Okay. Your brain is going to default to these type of certainties. It wants certainty. And you need to be aware of these type of certainty, this attitude towards certainty, this intention, this desire for certainty. Very, very, very dangerous in trading. Okay. The only certainty you should have is in following your rules. You need to be certain that you followed your rules every single time before you even allow yourself to trade. Okay. And these are all tips that you guys can use. So something that helps with confirmation bias is having these invalidation rules and having them written out and having them in a flow chart. Okay, so if you haven't created your own flow chart, then you're going to struggle with confirmation bias. Okay, um, because without a flow chart, you don't have the reminders, and sometimes you need those reminders, especially when stress levels are high, emotions are high. Uh, During the session, having that reminder on the flow chart is very, very helpful. Okay. So I want to talk to you guys about the what triggers impulsive behavior. Okay. Let's have a look. Stress and volatility. Let's take these. Okay. Now, when we talk about triggers, triggers are essentially an external or an internal, um, I would say, how can I break this down? Something that happens externally or internally that triggers a primary behavior. Okay. And this primary behavior is an impulsive behavior. That impulsive behavior could be an over leverage, a FOMO trade. It could trigger a particular emotion. Okay. So a trigger is something that stimulates you either visually and in some cases audibly. You can actually hear something when you hear order filled. When you hear that order filled, that triggers a particular feeling, doesn't it? Because it's something that is conditioned. Or when you hear the an entry, a stop loss gets hit, there might be a particular sound. So these are triggers that can either that trigger a particular response. There's an emotion, and after the emotion, there's a response. So what you want to do is you want to identify what these are, especially during moments of stress and volatility. And what ends up happening is that when there is high levels of volatility, when price is moving quickly, or when there are there's emotional volatility, then this increases stress levels. And when the stress levels are increasing, this is a problem. This is a problem when it comes to performance. If there's too much stress, you want a little bit of stress, not too much. And one of the external triggers to stress in trading, and which is very common, is personal financial commitments. Your personal financial situation. You got bills coming up. You've got debt. You have family that needs money, um, etc. Okay, so all of these, this external pressure to make money, or you might hate the job that you're in and you really want to change it. Excuse me. This ends up triggering a lot of stress in traders, and I noticed that this first week of the month tends to be a week where traders feel high levels of stress because that's when bills are coming out. So the end of the month to the beginning of the month, when traders are having to deal with their bills, rent, etc., that's when stress levels are very high, especially if there's uh, arguments to do with money. with family. Those tend to happen around that time, right? When there's volatility in the market, when there's red folder days, um, when the market opens, these are moments of quite high volatility, and this could actually trigger high levels of stress. You want to be careful with this, guys, okay? Because it leads to very poor decisions. When you have stress, you release cortisol, and cortisol, it leads to things such as increased heart rate, impulsive decisions. It it triggers frustration and anger. There's even short-term memory loss. Sometimes your heart rate goes up, and that's not, you don't want to be too stressed in trading. Otherwise, it's going to trigger very, very poor decisions. So it's important to schedule breaks and develop these techniques to reduce the cortisol in your body. Things such as exercise. So the type of exercise that really helps is high interval training. So like sprints, for example, or you can do some sort of a class, a cardio type class, a spinning class. These type of exercises really help with dealing with stress. I personally like kickboxing. That for me is there's a lot of conditioning in that class when I'm in class, and yeah, that I feel so much better, especially if I've had a stressful week. So you want to have develop these routines to deal with the stress. Sleep is a big one, guys. If you're feeling a lot of stress and anxiety and emotions in your trading, this is so underrated, and that is sleep. I hear so many young people or like young traders, they think that staying up all night, not sleeping well, it's like a flex, right? It's not. Okay, you're messing up with your body, you're messing um, with the reprogramming of certain behaviors. It's just an absolute mess. When sleep is poor, you stay poor. Okay, you got to have good quality sleep. You got to invest in good sleep, guys. Very, very, very important. Okay, and during the session, if you're experiencing high levels of stress and emotions, even positive emotions, if there's too much positive emotion, I always use box breathing as a way to just reset, recalibrate back to my neutral. So box breathing is very, very powerful. Okay. Um, and I'll give you an example of what box breathing is. So I usually breathe in for 4 seconds. So 1, 2, 3, 4. Hold for 4 seconds. 1, 2, 3, 4. And then breathe out for 4 seconds. 1, 2, 3, 4. And then hold for 4 seconds. 1, 2, 3, 4. And breathe in for 4 seconds. 1, 2, 3, 4. And hold for 4 seconds. So this is you do this around for a few minutes. Yeah, you want to do it for 2 to 5 minutes to get really good results from it. And you'll notice that that tends to get rid of a lot of the emotion. Okay, so this is something that you can do, and I would definitely suggest when you do it, just get up from the charts and do it in another room. Okay, just going to another room alone, that usually is such a great fix for traders. All right, let's talk about fear of missing out. This is something that traders always experience, and this is usually a very common trigger. Okay, and that's jumping into a trade due to the anxiety of potentially missing out on profit. And this fear is something that you need to understand. Okay, you need to understand that one of the emotions that we are most motivated by is fear. And if the more you understand what what you fear, and what triggers fear in you, the better you will be in trading. So how do we identify fear? Well, you gotta, this is why it's important to journal your trades properly. This is why it's important to track your emotions, because then you can always go back and look at the data, start seeing the patterns of when that fear comes in. Does the fear come in before you enter the trade? Is it when you're managing the trade? Is it when you're managing the trade and price suddenly reverses back towards your entry? Is that when you get when the fear is triggered? Is it triggered when price is almost near your TP? Yeah, everyone is a little bit different, okay? And so you want to understand where this fear comes from, and you want to find a way to reframe this. So this is what the work that I do is a lot of it is about reframing what fear is, in, I've managed to successfully reframe fear in my clients by getting them to realize that by not following their rules and their process, that is what leads to the destruction that keeps them poor. You know, they're breaking promises to their family, and their dream of financial freedom is being pushed away. So by not sticking to these rules, you know, they are self-sabotaging away their dream. And so the fear of breaking their rules becomes greater than the fear of losing money, losing the trade. And when you fear breaking your rules more than fearing losing the trade, you get rid of fear in your in your trading. So what we're doing is we're channeling your fear. So we're using fear in a different way. We're still fearing something, but we fear not following the process more than fearing if we miss the trade or if we miss the potential profit. So that's literally the best cure for FOMO. But to do this, you need to go through um, a system of coaching and accountability to be able to do this effectively. Um, and if that's something that you would like some advice on, some support, then reach out to me. You can connect with me on Instagram. So if coaching, if these sorts of issues are something that you want to learn more about, so send me a message. We can talk about it, and we'll see if I can help you or not. Okay. So it's once you've developed a good process, once you know your validation rules, your invalidation rules, once you have the data, you know, and once you develop these intentional and scheduled breaks where you're going for a walk, where you're practicing box breathing, you know, this starts to help with dealing with these triggers in your trading, like FOMO. All right. Now let's talk about the neuroscience of impulsivity. And I want to, you've probably heard me mention the amygdala. So what happens when we're impulsive is the amygdala is activated. And when the amygdala is activated, your the blood flow from your prefrontal cortex, the prefrontal lobe area, it starts to go towards your amygdala. Your amygdala begins to enlarge. There's more activity there. There's more blood flow. And this is a problem because when this happens, all of the part of your brain where you have strategy, logic, reasoning, risk, all of that goes out the window. And even impulse control, willpower goes out the window because now your amygdala is in control. And this is where you become very impulsive because you're just trying to survive. Your fight, flight, and freeze response is triggered. And this is very, very common. Every trader experiences this, but every trader has a different level of tolerance. Okay. There's some traders that they can't risk more than $50 per trade. And there's some traders that they can risk $5,000 a trade and they don't feel anything. But if they have to risk $500,000 for one trade, that's when their amygdala is triggered. They're now suddenly thinking, oh wow, this is $500,000. This is $500,000 for one trade. Oh, this is a bit much for me. So everyone has a window of tolerance. Some have a wider window, others have a more narrow window of tolerance. Whatever your tolerance is to in risk, or and tolerance towards stress, tolerance of trading, you need to understand what that is. Otherwise, then you're going to constantly be triggered into your fight, flight, or freeze response. And this leads to impulsive decisions like FOMO, closing your trade early, revenge trading, over trading. These are all the most common. And there's more, but you know, these are this group of impulsive behaviors is the number one cause for traders blowing up their accounts, self-sabotaging, and essentially leading to gambling tendencies. And this is a big problem. And I know this is not what you want, right? Now, the impact of this is that there's this period of time when you have heightened levels of impulsivity. Now, you got to be able to, when you experience these high levels of emotions, you've got to walk away, because you're no longer in the right state to make decisions based on probability and risk, because the part of your brain where it happens, it's not it's just not active at that moment. Your amygdala is active. So this is why I say to you, go for a walk. Yeah, just get out the office, get out your trading station, go do some box breathing, go do some press ups, go have a cold shower. Just get rid of those emotions. Go to the gym. And that, just walking away, that alone is a skill. Like, just getting your hand off the mouse. That in itself requires some skill, especially when you're impulsive and emotional. Okay. And this is why working with a coach is so good, because imagine having a coach on call, or on the chat, right there in the moment of your emotional and your fight or flight response. And they're there to support you, to even stop you sometimes and say, hey, listen, you need to stop. In some cases, I've got the logins for my clients' accounts, and we can lock them out. We can lock them out, their trading accounts. We can just change the password. They can't even get back in. All right. So this is something that coaching really helps. Now, something that you can develop to gradually improve this problem is to practice mindfulness, practice some meditations. When you're exercising as well, really focus on the exercise. Mindfulness really is just the practice of being aware and present in the moment. That's really what it is. The better you are at it, the better that you are at focusing, the better that you are in recognizing how you feel, and also to calm yourself down. Yeah. a, a calm and composed trader is 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 usually a very consistently profitable trader. Okay. If you tend to be very emotional, very reactive, very defensive and aggressive in outside of trading, you're gonna struggle in trading. Okay, you're gonna have to control. You're gonna have to become a calmer person. Yeah, someone that is patient, someone that doesn't react straight away, someone that assesses the situation, and assesses their options before they react. Very, very important. Now, I want to talk about delay gratification, because delaying gratification is such a powerful practice. And for example, you can delay gratification with the way you eat, and also with exercise. And I'll start off with the way you eat, because one of the things that we love the most is eating, right? Our body needs it to function. But if you're struggling with discipline, then and you're struggling with impulsive behaviors and you want things now, and you tend to get things now outside of trading, but in trading you don't have that luxury of getting things when you want. Okay, so you have to be able to develop this delayed gratification skill, and delayed gratification in society right now, like 99% of traders, their delayed gratification is just going down and down and down. Okay, most traders they don't have, they can't delay gratification. They want things now. This is why they struggle in trading, because they want to pass the challenge now. They want to make money this week. They need to make money this month. That's not that's not really delaying gratification, is it? So with diet, one of the ways you can develop discipline and delay gratification are things like fasting. Okay, like right now, for example, I'm fasting for Ramadan, and I really want to eat, I really want to drink water, but I'm delaying that gratification. So when I do have it, and it's when I have it at a set time, and and I control what I drink and I control what I eat. When I have it, the satisfaction and the gratitude in that moment is so high. And so what ends up happening is the first 2 3 days is very difficult. After this, I enjoy it. I actually enjoy fasting. I enjoy the practice of it, and I enjoy breaking my fast. And so what I'm doing is I'm developing physical, mental, and spiritual discipline. And with exercise, like if you want to build muscle, you can't you can't go to the gym 2 3 times and then expect that muscle to grow. No, you have to go every single week, 3 4 times a week, and then you got to put extra weight on it. And you can't just go to the gym and just lift a light weight. No, you have to lift a weight that's going to uh, give you some strain. Like you really have to go into it, because that's what's going to. So you have to develop. You have to go through some uncomfortableness. You have to burn the muscle in order for that muscle to grow and be strong. So you don't get the results right away with exercise. You have to delay it, right? Um, and this is when you do this, you develop a more patient, more calm approach. This type of attitude. Yeah. Hold on a minute, guys. Just having some. Need to reload my page. Just one moment. Okay, we're back. I'm gonna share my screen again. I needed you all to be a little bit patient there. All right. It looks like we've still got okay, we still got emotional intelligence to go through, and controlling impulsivity. So I'm gonna try and go as quick as I can, because we're coming up to the top of the hour. So we might go over a little bit today, but that's fine. I'll just check my schedule quickly. Yeah, that's fine. We're good. Right. Let's talk about dopamine and reward seeking. Uh, Now, trading, it does give you, it is a very enjoyable practice. Most of the traders that I speak to, they really enjoy trading. Trading it pushes you to be at your best. It pushes you to be strategic. And when you're someone who's strategic, who makes these predictions, who has to control themselves, who has to delay gratification, has to think 2 3 moves ahead, this is actually a very enjoyable practice. And especially when you get it right, it's because trading is gamified. The better that you are, the more money you make. The more money you make, the better your lifestyle. What that's one of the best possible games you can play, right? So this gamified approach, it's what makes trading so enjoyable. But this can also lead to the wrong kind of addiction. Trading can become very addictive. It can actually become a gambling addiction. You need to be very, very careful with that. And and you got to be able to find balance in your life. Otherwise, you end up becoming so addicted to trading that even if you're losing, you still keep going, you still keep investing money, you still keep repeating the same patterns over and over again without changing. So, what do we do? Well, you got to understand how trading impacts your emotions. You got to understand when you are feeling very euphoric. Otherwise, then trading becomes a practice where you're seeking dopamine and you're seeking reward. And this leads to over trading. This leads to revenge trading. It's so problematic. So it's very, very important to develop, like I was saying, a very balanced lifestyle where you have an exercise routine that gives you some reward, gives you dopamine. You want to have a morning routine that does that. You want to have relationships and people around you that also provide you with a healthy dose of dopamine. You want to control things like social media and just like zombie scrolling because you're seeking so much dopamine. If you're going on your phone constantly without and wasting so much time on your phone, then that goes to show that your brain is seeking constant dopamine. You need to develop the practice of just doing nothing sometimes, like going for a walk without checking your phone, pausing for a 5-10 minute break without checking your phone. Can you actually sit for 10 minutes without checking your phone, without going on the internet and just chilling and just looking around? Yeah, this is a very powerful challenge for you guys. Because that's going to lead to more control when it comes to seeking reward. Okay. Now, having high levels of emotional intelligence and self-awareness is going to help massively, and understanding your personal triggers and emotional responses comes with having a very clear and consistent journal. And it also helps to work with a coach that understands you, understands your triggers, knows your strengths and weaknesses, and you're able to work with them on a one-to-one basis or in a small group, because having because doing so, it allows you to be more reflective on your own experiences in trading, and it also allows you to create a positive feedback loop and a positive reinforcement loop. And by creating these positive loops in your trading, this is where you're where someone is providing you feedback. This is when growth accelerates. Okay, because on your own you may not have anything to provide you feedback, so there's just no growth, right? There's no growth. You just stunted. You're stuck. um and this is why having high levels of self-awareness and working through that with a coach is so powerful, because this leads to disciplined trading. This leads to you knowing your strengths and weaknesses, and it allows you to know when to walk away. And it also allows you to know when to push hard, when to actually put full risk on, and when to be aggressive, because when that's the times where you're going to make the most returns in your trading. So it's good to conduct a daily self-assessment and have someone review that assessment, provide you with feedback. So we develop scorecards for our traders to monitor this effectively. And now let's talk about controlling impulsivity. Let me go ahead and okay, we're good. I've spoken about delayed gratification, and this is traders seek immediate rewards. Uh, you traders, you want to make money now. You want to get that payout. You want to pass that challenge. You want to use the money to purchase this, but you want this quickly. You're desperate for it. Okay, you're in this scarcity mindset, and this is a big problem because it compromises long-term success. It compromises compounded performance and consistent compounded performance. So you want to be able to train your brain. You want to train your brain to be process orientated, to not allow these external pressures of life to dictate your decisions. Okay, you want to. Otherwise, you're going to end up making the same mistake over and over again, like over trading, revenge trading, because you want things now. So it's important um, to develop this skill of delayed gratification. And what I suggest to traders is to create a pre-commitment. So a pre-commitment is something that works really, really well in a coaching environment where all of your decisions are already pre-planned. So that's why it helps to have a flow chart in front of you, and it helps to also report to a coach and say, hey, listen, this is my plan for today. I'm going to do this, and I'm going to avoid these. If I do any of these, then call me out. But this is my focus. This is my process. And then check in at the end of the day. It's having this type of approach. It really helps to reduce the volatility of emotion in your day and your decision making. I'd also recommend developing, introducing certain automated systems in your process, such as alarms or software that can lock you out of your trading websites or applications. Uh, things like setting limits on your phone on how long you spend on social media, or just completely getting rid of social media. I've got clients that I've forced them to get a second phone, one phone for trading, one phone for personal. So when they finish their session and they're with their family, trading phone stays on the desk, personal phone goes with them. That way, then they're more present when they're with their family. They're not distracted in the gym when they're meant to be exercising, or they're not distracted when they're going for a walk. Okay, so I hope that's been very valuable for everyone. Um, I realized that there isn't a live chat that I have access to, so I can't see your questions. So what I would recommend is, if you have any questions, to reach out to me on Instagram. Okay, let's see. Reach out to me on Instagram. It's rodrigo.trader.coach. You should find that handle in the description. I'll see if I can open up my Instagram page so you'll be able to see it. Share this instead. Here we go. Yeah, there you go. So rodrigo.trader.coach. Send me a DM. If you've got any questions, I'll be happy to go through those. All right. Okay. All right. So thank you everyone for tuning in, and thank you Think Capital for the invitation. Hopefully there is another webinar coming up where it's a two-part series, and I'm going to be diving deep into some of these more common issues that are happening. So let's have a quick look at what I'm going to be covering next time. It's going to be about, let's see, Yes, building an edge. Um, so how to build an actual proven edge. And so this is a very important topic that many traders don't really truly understand how to actually build a method, a system that is going to help them be profitable. So I'm really looking forward to that one. So make sure that if you've learned anything in this one, you found some value, share it with another trader, share it with a friend, and the when I do the next webinar, make sure you share that one as well, because that one is it's going to be like, I would say 99% of traders don't truly understand how to build an efficient and profitable edge. So if you're not profitable, or anyone that's not profitable, send them that webinar as well, because it's very, very important that traders watch that one. Okay. So on that note, thanks again for tuning in, and I'll see you guys on the next one. Take care, everyone.